The only big U.S. tech company to escape European Commission antitrust scrutiny is about to be investigated. Facebook's alleged anti-competitive practices will be examined in a formal investigation to be launched in the coming days. That's according to the Financial Times. Officials are already beginning to probe whether Facebook's promotion of its marketplace service for free distorts the classified ads business in general. Tesla is changing how its vehicles navigate when driver assistance features are enabled. The automaker switching to a camera-based system versus radar for its Model 3 and Model Y vehicles starting this month. Radar will remain in use on Tesla's higher-cost Model S and Model X. Meanwhile, Bloomberg has reported earlier in the week that Tesla had partnered with Luminar to test LiDAR in its cars, although Elon Musk has been very vocally skeptical of that technology. Uber riders may not be happy right now with high prices and long wait times. Apparently, neither is Uber CEO Dara Khosrowshahi. We're not happy with the ETAs and price levels we see, and that is something we're going to invest to improve on. He said that yesterday at the JP Morgan Technology, Media, and Communications Conference, and this is something we have been both watching and I guess experiencing, Brian Stasi. Not sure how he fixes this situation.
Yeah, well, I encourage Dara to get out of that comfy C-suite and go find some warm bodies to get in these cars, because now investors are also going to be feeling the pain too as well. I'm looking at Uber shares over the past month, down about 12%. And clearly, the market may be saying here, sure, they could charge higher prices, but is that turning consumers off? And because of the labor shortage, are they just missing out on business? Is that business going to Lyft? Is Lyft in fact, not able to get its business because it's dealing with a worker shortage as well? We just talked to John Zimmer a couple of weeks about this. He's trying to find workers as well, and that stock's down about 14% over the past month. So both ride-sharing stocks, not right now, are not acting, I think, as you would expect, given the reopening of the economy, Miles.
It'd be a little ironic if two companies that sort of sprung up as, arbitrage opportunities on lax regulations basically find themselves actually under pressure after spending all the time and energy lobbying against various laws and initiatives, actually just found themselves at the whims of the business cycle and were no longer able to ride extremely slack labor markets after a shift in fiscal policy. Forget about regulation. It ended up being fiscal policy that was sort of the elixir for these businesses. We'll see. We'll see in time. But we have all read enough stories about the challenges of being a driver for one of these services and actually making the money the market is available to those drivers to know that when there are better opportunities and higher paying opportunities, people will seek them out before necessarily transitioning to a Lyft or an Uber. But we'll see again as we get through the cycle here.